Welcome back. You're still watching Finweek, Money Matters. Remember, this is the show that helps you manage your finances, and we'll be taking a look at the construction sector. Africa's big 5 construction firms have lost nearly 80% of their value since 2007. That's 60 billion rand of shareholders' wealth. Now, that's roughly equivalent to Capitec's market cap. But could this be the bottom of the cycle? Joining us in studio to discuss the outlook for the construction industry and investment prospects are Andries Roussouw, Energy and Mining Assurance Partner at PwC, and Andrew Dittberner, Chief Investment Officer at Cannon Asset Managers. Gentlemen, thank you so much for joining us this afternoon.
Thank you.
Andries, let me start with you, and this is it's a pretty simple question maybe. Why have things gotten so bad? Why is the construction industry one that's been said really under a lot of pressure?
The construction industry is cyclical, and we've seen a decline in the global economy, and that flows through to the construction sector. So from a public expenditure point of view, expenditure hasn't really grown. In fact, it's been fairly stagnant over the last few years. In the private sector, your mining guys, capital expenditure at the lowest level since 2005. So the industries that normally drive the sector is struggling. Any resources, oil and gas, commodities are struggling, and therefore the sector is struggling.
Cyclical in nature. Andrew, let's come to you, because there was a research report done by Cannon Asset Managers saying that a 60 billion rand was lost in shareholder wealth since 2007. So is this the bottom then?
I wish I knew if it was. I suppose that's $1 million question, and you'll only really know if it's the bottom with hindsight. When you look at that number, that 60 billion, I mean, you're talking of, the big 3 or 4 from at the height of the cycle in 2009, which was the likes of Avenge and Murray and Roberts, both of which sat in the top 40 index. They've subsequently fallen through the top 40, the mid cap and the small cap, and they're now actually out of the all share index. So that's the sort of extent to when you talk about destruction of shareholder wealth. Are we at the bottom, and are those companies going to go back to where they were? I don't think so. For Avenge or not, I don't think so. In their current state, they can't get back to where they used to be. Have we seen the bottom of the cycle? That's quite a difficult question to answer, because from a share price point of view, I don't see those share prices recovering to where they were, when you look at the companies as they are today. When you look at a company like Wilson Bailey Homes or Rawbex, for instance, they haven't really been through this massive dip.
And when we talk about some of the smaller players that have been in that sector, okay. Andries, let's just pick up on a point that you made. You said this is cyclical, as you've said, but there have also been some concerns that maybe this is also self-inflicted pain by some of these construction companies because of the types of projects that they pick up. They don't necessarily make financial sense.
Yeah, so I think after the 2010 crash in the construction sector, there was a decision that had to be taken by construction companies. Do we keep on employing the people that we have, invest in our capacity at no margins? And that's really what they did. They took on projects at no margins in order to be there for the next upturn. It was quite unexpected for a lot of them in 2013 when we had the second down dip, and that's when these big companies really got hurt. Liquidity is a real big concern, and that's why these companies are trading at the low levels that they are. The 9 listed companies are trading in aggregate at 60% of the net asset value. Now that's well below where one would like to see them, especially when you take into account that they're not very capital intensive. It's all working capital sitting on there. So the market, the investors don't believe that what these companies have on their balance sheets in terms of claims, in terms of working capital position is valid, or they at least don't believe it will realize at the same level that management believe it does.
Andrew, so what are the smaller players doing differently? So if we've spoken about the bigger guys, so you mentioned the likes of Rawbex, Cargo M3, they seem to be doing well.
Yeah, they've done exceptionally well. When you look at the likes of Cargo M3, it's in a completely different space, and so is Rawbex, and you could even, I suppose, throw Afrimat in there if you wish to. They're not heavy, big construction companies, that are building massive high-rise buildings. Cargo M3 develops low-cost housing. It's a turnkey solution. They buy the property, they build the infrastructure, the underground infrastructure.
They're going into the cemetery industry
and
too.
Yeah, if we can park that to the side, that's a completely different thing. Yeah. So they're not a heavy construction company building bridges and power plants and those sorts of things. So it's a completely different animal. Yeah. Likewise, Rawbex is, they've got an aggregate division. higher margins, and then on the construction side, they only focus on roads. So when you look at roads and earthworks, you've got higher margins in that area of construction as opposed to building and civils. So you're not really comparing apples with apples when you compare, your Wilson Bailey, Group 5, etc. And hence the environment's probably been a lot kinder to them, without wanting to take anything away from management. They've got superb management teams. As does the likes of the Wilson Bailey Homes, for instance. When you look at it, what it's done compared to the other bigger guys, or the historically bigger guys, there are good businesses in here. As Andries said, and I agree completely, you've got to pay specific attention to the balance sheet.
Andries, let's get to the government's infrastructure spend. What are we looking at? 807 billion rand. Will that come to fruition? Surely this is going to be good news for the big guys, right?
That's right, but that number has been above 800 billion for the last three years or so. They tweak and say how many years it'll take to get it spent. I think there's more focus and impetus coming from government in that sense. There's an absolute need that we get infrastructure going in this country now at the bottom part of the cycle so that we can benefit from commodity prices when they do pick up eventually. You need to bear in mind that 870 billion is not all construction related, so that includes property and plant additions as well. So if Transnet buy rolling stock, which has got nothing to do with the construction sector, that number is included in your 870 billion. The growth in that number over the last 5 years has been at sort of 2% in nominal terms. So it's been declining in real terms.
Andrew, let's get your view on expansion outside of the African borders. In the retail space, we've seen them going to places like Europe, and this is where they said there's a lot of potential. So for the construction sector, there was a lot of talk about Australia and Dubai. Is this still the case? Are we seeing these companies going to those particular markets?
Yeah, they've been going there for many years now. Africa was historically a big one, and everyone spoke about Africa being the next big thing. And probably over the past 2 or 3 years, Africa's suddenly been pushed to the side slightly, given the oil problems and that sort of thing. And construction's not for sissies, and working in Africa is definitely not for sissies. So you're getting a double whammy when you go take construction up into Africa. It's incredibly difficult to execute there. But they have gone there. The likes of Group 5, Wilson Bailey Homes are there. And then Australia's been a big one. That's a lot of construction companies have gone over with varying degrees of success. Wilson Bailey Homes, over 50% of their revenue now comes from Australia, but the margins are exceptionally thin. So they're looking at 1-2% operating margins from Australia versus a 6-7% in South Africa. So, whilst they've got big exposure there, the earnings hasn't been as profitable as Africa has been for them. The likes of Murray & Roberts, Avenge are also in Australia, and I don't think it's been a massive success, but it's definitely diversified the risk away from South Africa in particular, and I suppose Africa in general.
Before I go to Andries, I just wanted to stick with you for a moment. I'm hearing very, very thin margins, and it's a tough industry. Are there any stocks in that sector that you are bullish on?
Yeah, look, the sector looks attractive. There are a number of shares that Cannon Asset Managers are invested in. Rawbix is one, and Wilson Bailey Homes is the other when you talk of the big construction companies, and then Colgrave M3. And Rawbix, or if you start with Colgrave M3, they've done superbly well. Rawbix is still attractive or attractively priced. Colgrave is probably fairly valued now. The share price has gone from 5 Rand to 20 Rand in the space of 2 years. So it's done quite well. Rawbix and Wilson Bailey Homes, from a balance sheet perspective, we think they're the highest quality construction companies, and definitely attractively priced, and the best run construction companies in terms of management. So yeah, there's definitely opportunity there.
Andries, you kicked us off with why we are sitting in the position that we are in the construction sector, so it's only fair that you round this up and tell us about the outlook for the construction sector.
Yeah, so it's not positive at the moment. We need economic growth, and the construction sector is very much a lagging sector. So you first need the commodities and the economy to pick up before we'll see fantastic growth in the construction sector in Africa, at least. The problems in Australia is very similar to ours because it's all oil and gas and commodity price driven. That's why they struggle. Energy has been a big thing for the construction sector, and that's been the one shining light, I guess, in terms of where companies have been able to generate extra revenue and at better margins as well. And that's not only in South Africa. I mean, our REAP program has done fantastically well in South Africa from an energy point of view. but the rest of Africa as well. We're sitting with 600 million people without electricity in Africa, so there's bound to be more investment coming on that. Globally, I think we're looking at the emerging markets. Well, we shouldn't forget the mature markets. The USA is bound to go through a re-round of new infrastructure. Concession investments that typically a Group 5 has got in Europe, and now that's looking positive for them, certainly in the last half-year results. So the companies need to focus, understand what the risks are in the areas where they invest, and then perform well and execute well.
Find those good quality projects. It's hard to say, because if you're in Sandton outside, there's construction going on just about everywhere. Gentlemen, thank you so much for coming through this afternoon and talking to us about the outlook for the construction sector. Very big thank you to Andries Roussouw, Energy and Mining Assurance Partner at PwC, Andrew Dittberner, Chief Investment Officer at Cannon Asset Managers. That's it from us, but before we go, be sure to go and get yourself a copy of this magazine. Yes, it is available at your nearest store, or you can just go online and have a look at it then. Until next time, have a fantastic weekend.